The terms dovish and hawkish are second nature to anyone covering central bank policy, finance and economics. If the Bank of England is dovish, it's expected to keep monetary policy loose. If it's hawkish, it's expected to keep it tight. These terms have become so ingrained on our collective subconscious, we don't even question them. But where do they come from? I made a start at exploring this question at the Horniman Museum in London, famed for its anthropological and natural history collections. According to the Bible, a dove was released by Noah after the Great Flood to try and determine if there was dry land. When it came back carrying an olive branch, this was seen as a signal that yes, it's finally safe to come out. Christians have used the dove as a symbol of peace ever since then. But that doesn't quite explain what a dove and a symbol of peace have to do with monetary policy. Then there's the hawk, which we know is a predatory bird with a predisposition for attacking its victims out of the blue. But again, what does a hostile winged attacker have to do with a central banker dead keen on raising interest rates? Turns out I wasn't the only one in the FT newsroom who had no clear idea of where these terms came from.
Hunting?
Wow. It must be biblical, no?
I actually can't remember where the terms dovish and hawkish originated from.
I'd say it's to do with some sort of peace treaty many moons ago.
Well, the dove is biblical, right?
I don't honestly know the right answer to that.
I used to know, but I can't remember and have absolutely no clue now.
What's the opposite of a dove, a hawk?
It sounds like a hunting metaphor, doesn't it? You send out the hawks to hunt the pigeons, which doesn't sound so good once you think about it that way in terms of central banking.
But it wasn't just my FT colleagues who were stumped. When I reached out to the banking community, their answers offered a similar range of varied responses, making me realise that perhaps there was an interesting story to be found here.
The great thing about archives today is that you can search for almost anything from the comfort of your laptop. Doing a search for the terms dove and hawk, at least on our own FT archives, produces some very interesting results. Here's a story by Samuel Britton in 1966, and it's seemingly the first time that the phrase dove and hawk is used, at least in a central banking and economic setting.
In the Federal Reserve Archives, the date is echoed once again, with what appears to be the first official reference in the FOMC minutes being attributed to someone called Albert Koch in May 1966. So what exactly was it about the 60s that could have given rise to such polarising language? We know the 60s were a transformational decade. Social norms and long-standing hierarchies were being disrupted everywhere, including everything from feminist movements to the Black Panthers and the hippies. It also played host to one of the most divisive wars of the century, Vietnam.
Doves were those people who were looking for a more negotiated solution to the Vietnam War, whereas the hawks really tried to find a military solution, tried to increase the number of Americans fighting and also using extreme firepower like American bombing. One of the interesting things about the Vietnam War is also how it was de-escalated in 1968. And part of the decision was really an economic decision, because by 1968, not only was it clear that it was very difficult to win the war, but it was also clear that it would be too expensive in the long run.
Underlying the Vietnam crisis, of course, were the tensions of the Cold War. Could the terms be linked to that as well?
That was where, to my mind, they first became in common use in foreign policy, and throughout the 50s, 60s, 70s, they would define people who want either to be tough on the Soviet Union or not tough on the Soviet Union, or hawks are in favour of higher military spending, doves were against. So that was the context in which I got to know the terms.
The idea that the terms dove and hawk originate from the warlike terminology of the Vietnam conflict is certainly a plausible and logical theory. But sitting here on the steps of St. Paul's, I can't help but be reminded of another famous example that links banking and birds together, that famous 1964 film, Mary Poppins.
In the film, Michael, the son of Mr. Banks, is faced with an ethical dilemma when deciding how to spend his tuppence piece. His father wants him to invest it frugally in the financing activities of the banks. These include everything from railways to Africa to dams across the Nile. But Michael is resolute. He wants to use it to feed the birds of St. Paul's. The bankers don't take kindly to that sort of activity.
Fiddlesticks, boy, shout the bankers to Michael. Feed the birds, and what have you got? Fat birds. What this statement is subtly referring to is a concept that usually sends fear into the hearts of central bankers everywhere. It's called moral hazard, and it's based on the notion that if too many of us get something for nothing, then a terrible precedent can be set for society.
This is why, in order to stop Michael's tuppence from going to the undeserving birds, the bankers make a big show and dance of all the more productive ventures it could be invested into, alongside the rudimentary promises of higher compounded returns. It's worth noting that the bank run scene is unique to the Disney films, having never been featured in the P.L. Travers books. So was Walt Disney, who himself had a history of bankruptcy, using Mary Poppins as a metaphor for the role of the nanny state in economic and banking affairs? Was it his opinion, then, that such a nanny must strike just the right balance between discipline and playfulness if she's to provide the right incentives for the children in her care? If we take that reading, then perhaps what Mr. Banks represents is the disciplinary force of the hawk in society, whereas what his children represent is the indisciplined birds.
As Poppins herself explains to us, the best way to strike a balance is to find an element of fun in the job that needs to be done, and that way the job becomes a game.
The idea that games play a fundamental part in social systems presents us with another interesting connection between dove and hawk terminology and the 1950s and 1960s. As UCL mathematician Dr. Stephen Bagent explained to me, it was at this time that a major new theory was breaking through academic circles. It was called game theory.
Game theory really originated around about the start of the Cold War, where people realised that there was a mathematical approach to determining what might happen in some kind of conflict. And then from there, game theory got widely used in economics, psychology, business, and came to biology in the early 1970s.
According to Dr. Bagent, in life we are continuously faced with game-like dilemmas, most of which come down to a choice between altruistic and cooperative behaviour, seen as dovish, or selfish and aggressive behaviour, seen as hawkish. In the City of London, Mark Bigwood takes advantage of those traits to scare off the nuisance pigeons with his hawk Denison.
The characteristics of the hawk are they're very tenacious, they've got very good eyesight. In the wild they use ambush techniques, and they got lightning fast reactions. So it makes them quite a formidable predator.
In life, of course, you never know who's a hawk and who's a dove.
No player knows what the opponent's going to play. So they all look outwardly the same, and it's only when they engage in the game so they get to know whether they're playing a hawk or a dove.
But it's also the time frame which can determine the way we behave. The shorter the period we have to make an impact, the more likely we are to behave in a hawkish way. That means most of the time life is full of hawk-on-hawk encounters. The depressing thing about that is that it's only when we're all being hawkish that society becomes most stable.
The only time you can get out of that hawk-hawk situation, where everybody tends to lose, is by playing a game where nobody knows when the end is going to be. There's always a small chance that someone may interact again in the future. And then it's possible to have cooperation evolving from that under the right conditions.
A key insight from game theory, then, is that truly cooperative systems are a highly unstable thing, precisely because there is always this risk that someone will be incentivized to play the hawk and disrupt the balance. The idea that a constructive civil society is dependent on a balancing act between two opposing forces is one that was clearly gaining traction in the 1960s, penetrating even the superhero sphere in 1968 with the launch of a DC comic entitled Hawk and Dove.
It's based on two brothers. One has the powers of a hawk and the other one has the powers of a dove. And the idea is that together they always come to the best outcome, because the dovish brother, he uses strategy and calm, rational thought to get out of scrapes, whereas the hawkish brother, he's much more aggressive and will use violence. Together they form a really good team.
The idea coming together in the 1960s then is that the economy is a dynamic and complex system in which stability emerges from the very fact that predatory and cooperative forces are constantly balancing each other out. The question is it useful to use such emotive and highly charged terms as shorthand for the policy intentions of central bankers?
I don't use them, I've never used them, because I think it confuses an analytical distinction, what you think about the future of inflation, with an emotional state, whether you're inclined to be a nice, pleasant, accommodative person or a nasty, horrible, tightening person, and they're two completely different things.
Fundamentally, money is a rationing system for the world's wealth and resources. That means whoever has the power to allocate those rations or to control their number has the ability to determine what proportion of doves and hawks there are in society, and with that, the system's stability. Think of it this way. The easier it is for the undeserving doves to be protected by a nanny state with access to cheap money, the greater the risk that society becomes complacent about having to work at all, exposing it to the risk of decay. At the same time, too much work and no play, and you end up in a scenario where, just like Mr. Banks, you begin to miss out on the stuff that makes life worth living in the first place. In the most extreme scenario, you create a hostile environment that has no room for altruistic or dependent entities at all. Given that it's central banks that ultimately decide the money supply, I can't help thinking there is some logic to reducing all this to a dove and hawk game after all. This is Izabella Kaminska for the Financial Times in London.